Welcome to the B2G Victory Cast. This episode takes the mystery out of surety bonds with our guests, Justin McQuain and Brian Herrera of M Surety Services. These industry experts will answer common questions and share their expertise in construction and bonding. Thank you for joining us.
Welcome to B2G Victory's Victory Cast. My name is Mark Praigg. I'll be your host today. We're very pleased to welcome Justin McQuain and Brian Herrera from M Surety Services, and they're going to speak to us about surety bonds. So Justin, first of all, let's start with you. Can you give us a background about you and how you started M Surety Services?
Okay. If it wasn't for my dad, I probably would have never known about surety bonds. It's a very niche business, but I'll just take you back to 2000. So I graduated college in 2000, Texas Tech with a finance degree. When I moved back to Houston, I got into the banking industry and was a manager of a local bank. And after serving there for 2 years, I started working for my father at McQuain Agency, just a local bond agency here in Houston. From there, I went on to work for a national broker out of Minnesota. I started there in 2010. And then in 2018, that company was bought by another company out of New York. And that's when I decided to start M Surety Services. So in May of 2018, I broke off on my own and founded in May 2018. And in October 2019 is when I was able to hire my first employee. Since then, we've grown to a team of 6, and we're continuing growing, bringing on another producer in December, I believe.
Congratulations.
Thank you very much.
So, Brian, tell us about your background, and if you will, describe to us a little about what a surety bond is.
Sure. So my background is actually in architecture. I went to school and got a University of Houston and got an architecture degree. So first, working in Houston, I ended up working on a bunch of public projects for Houston Community College, independent school district work. All of these jobs are bonded, and it turned out that I had a lot of experience there. And so as the years went by, I ended up talking to Justin about what he was doing in the surety bond industry and decided to kind of segue and come to the other side of the table, providing the surety bonds with the resources and the construction information base that I had. So a surety bond is typically written for payment and performance. It's going to protect the owner for performance to make sure that the job is built per specification. On the payment side, the bond will protect any suppliers and subs of the general contractor for non-payment on the job. So both of these recourses for the job just keep the contract and the job going forward. As a public job, you can't lien the job. It won't be stopped. So the recourse is the bonds.
Very good. So describe, if you will, an SBA guaranteed surety bond.
Sure. So you have a standard market in surety where we partner with standard surety partners that are going to underwrite to a more standard position. Where you get into SBA guarantee, the application process isn't much different. You still have to provide a questionnaire. You still have to provide financials. You still have to do the normal underwriting things. It's just going to be different how the SBA utilizes that information. They do have additional leniencies within the SBA. There is a recommended underwriting allowance. If you can get to that allowance different than the standard market, then you can get some approvals. Basically, you have a different way of looking at working capital. You have a different way of looking at how they use unused line of credit from a bank. There are going to be other tools involved. Basically, within those two major differences, the SBA can get you a guarantee where maybe the standard market can't.
So Justin, if you were evaluating a customer, are there criteria that you use to say if they're a good fit for a conventional surety bond versus an SBA guaranteed one?
Definitely. The first thing we're going to try to do is get them with a conventional carrier like a Travelers, a Hartford, a Liberty Mutual. It's when they don't qualify for that standard market is when we start to use the tool of SBA to try to get them approved. There's also the benefit of SBA is maybe in the standard market you get approved to a certain level, but then you can put them with SBA and they might be able to get a little bit more capacity to go bid work. But at the end of the day, we're going to look at them to try to write them as a standard market because the SBA does have extra paperwork. It does have an additional fee on it. But if it allows you to get a bond approved through SBA, where through the conventional market you typically would not, it definitely is a benefit for small and emerging contractors.
Got it. So let's say I'm a subcontractor and I need a surety bond, a performance bond specifically for a project for $1 million. What could I anticipate the fees to be for that $1 million performance bond, both conventional and SBA guaranteed?
You have different scopes of work in construction that are going to determine what those rates are. Typically, we're dealing with a Class B rate. It's a standard Class B rate, which includes general contractors for the most part. There are some unique rates based on sub-level bonds, but for the most part, Class B is going to provide the rate for a ton of the folks that we see. That same rate would be applied if we end up having to get the guarantee from the SBA on this bond. It just would tack on additional 0.6% for the SBA for their taking on the liability of the bond and it being backed by the SBA. It's an additional 0.6%.
Typically, though, around 2%.
Oh, 2%?
2%. I mean, it's a tiered rate, so it could be a little lower. Just depends on how large the job is. It starts at 2.5 on the first 100,000. Then that rate drops to 1.5% on the next 400,000. It keeps going down. So a blended rate on $1 million bond would be around 2%.
And so, of course, things like credit scores and cash on hand, would those figure into the rate?
If you're going for that standard, the lowest rate possible, yes. We're going to look at the 3 C's, which I think Brian might get into a little later, but the 3 C's is character, capital, and capacity. Mm-hmm. Character is running personal and corporate credit to make sure that you pay your bills, that you don't have any tax liens out there, don't owe back child support, just different types of stuff. That's the character component. Your capital component will be your cash flow, the strength of your financial statement, the strength of your balance sheet. And the capacity part is what kind of experience have you had in the past, so that we can determine what size jobs that you can go after and what aggregate liability you can have out there at any one time.
Which brings me to another point. What separates somebody who's successful with a surety bond versus someone who struggles? I
think initially the processes that contractor has in place is going to be a huge starting point for their success, regardless of they're getting a bond or not, right? I mean, the bond is there in place to protect from certain situations, but if the contractor is timely with his reporting, those types of things are going to lend to a successful contract. We don't really want to get into a situation where we have a claim on a job. That's where the surety will step in and maybe mediate some kind of dispute. But if the processes are in place, if the financials really are being presented timely and they have a good bookkeeper or a third-party bookkeeper doing those financials, that tells a whole lot about the success of the contractor right there.
So I can think of an example of a client that I've worked with, and when I worked with the Minority Business Development Agency, and he could see that the project was headed south, and so he engaged the surety bond company because he wanted to protect himself. And so, as it turns out, the surety bond company intervened, hired one of the best lawyers in town, and it ended up working in my client's favor. Do you have examples of that from your own experience?
Not off the top of my head. I mean, we do get into potential scenarios. There are a lot more claims that come through versus performance. Performance is a big deal when you get to that point of mediation. It doesn't happen too often. Any job struggling can get a claim based on payment coming down from the owner. There's many reasons. It could be mismanagement by the contractor, yes, but there's a couple different reasons why that payment claim could really be presented. Basically, you just have to come to the table, talk to your contractor, see what the problem is. There's generally a reason. Maybe there was a delay in weather. There's a few reasons why that could really happen.
And how about you, Justin? Have you?
I'm just curious, real quick. Was your client a subcontractor that was on a bonded project?
He was the prime.
So he was the prime on the contract.
On the contract.
So he had a bond in favor of a city of Houston or somebody like that.
Yes. It was in Fort Bend County, and they could see he was hemorrhaging money on the deal. And in order to prevent hemorrhaging more money, he turned to his surety bond company.
So from time to time, depending on the client, the surety company will get involved if it's a way that they see that they can get the project to completion, that they can get all the subcontractors and suppliers paid, and maybe get the bonded client, the bonded principal out of a situation. I actually currently have a situation going on right now where my client was getting slow paid by a couple of owners, so he could not pay the payment claims. The surety stepped in, paid the payment claims, and my client currently right now is paying them back. That doesn't happen all the time, though. You have to be a really good client that has been with that surety for a while, has built a relationship with them, because the surety's not always going to step in and start writing checks. They typically try to stay out of it until there is no other options. And that's when they typically will actually get involved, and that's typically when a contractor is actually going out of business or unable to finish the project. But at the beginning, they will start off as a partner. They will try to get the job to completion.
So how do people get in touch with you? What if someone wanted to find out more about the products and services you can offer? How do they get in touch with you?
We have a website, msuretyservices.com. We also have an office in Spring that they're welcome to call and get a hold of us, as well as our cell phones. We're around town as well at association luncheons and meetings, so we meet folks there. We do get some interest there. Also some referrals from those associations, just people that are interested or maybe have some initial questions about bonding. So any normal way to contact us by email or phone.
And what is your phone number?
Phone number is 281-546-8666. And email is brian@msuretyservices.com.
What makes you feel as though you've delivered for your client? What gives you that sense of satisfaction that you've done what you were supposed to?
So for me, I believe that when M Surety was founded, we have a singular focus on construction bonding. We don't do insurance, employee benefits. We focus all of our attention and knowledge on surety bonding. And we don't look at ourselves as more as salesmen where, hey, we've got a client, they need a bond, we write the bond, we go down the road. We look at ourselves more as consultants. We team up, facilitate relationships between our clients and all of the industry-leading bankers, CPAs, attorneys, insurance brokers, equipment dealers, pipe and cement concrete suppliers. We try to get them with the best in class so that they surround themselves and can grow their business profitably. So we look at it more as, instead of just trying to get a bond written, how can we get this bond written, but plus 40 bonds in the future written for this client so they can grow as a company and be successful. So we try to bring different partners in to team up with them and help them out.
I would imagine your years of experience and knowing the players in the industry assist you.
Correct.
Yep. So do you have a success story you want to talk about with one of your clients?
Sure. I have a client that I've been working with for 3.5 years, that initially started out, couldn't get a bond. There were many improvements we had to make, from financial statement preparation, growing the business from that standpoint. So after years and years of consulting with them, we got them with a bookkeeper that helped him understand how he would run his business internally. And ultimately, those financials became reviewed CPA prepared statements, which in bonding allows them really at $1.5 million single size to go higher. So a huge success story for me and for him to help him, super smart guy, and help him get to where his company could be. So really you're talking about an entry level, or I believe I might have even had him in the SBA to begin with, and graduated him out, and now is often doing $4.5 million single size jobs. So it has its work, but consultant based is what we do. You know, every solution is different for every contractor. And that's what we try to provide. You know, what's really going to get them, put them their best foot forward, and get them to where they want to be in their business. And so it's nice to see those actually come to fruition. 3 years is a long time working with a contractor and getting him to where he wants to be. So it's been nice.
Well, terrific. I do know that in a previous life you presented to a seminar,
Yes.
and as a consequence, the Small Business Administration saw a 150% increase in SBA guaranteed surety bonds. So they were immensely grateful for that increase in production. So I wanted to mention that.
Well, thank you.
I would like to circle back on what is a surety bond and who's it intended for.
Sure. So a surety bond, it's required by the Miller Act, and any job with taxpayer dollars, a public funded job, has to be bonded for payment and performance, typically at 100% of the contract amount. Those two bonds are a payment bond and a performance bond. There is also a maintenance bond in the background for the same, typically 100% of the contract amount as well for a year. So what they do, the owner is protected by the performance side of the bond. Every contract is going to have specifications for how the job has to be built. If there's ever a concern that something wasn't done to specification, it's the right of the owner to contest that and question it. And the performance bond has to provide a solution for that in a situation where there was something default. There's also the payment bond that, again, that provides protection from the G to the subs for their materials and labor if the GC is not making payment. So you have two pieces of recourse really that are the main functions of the bond, payment and performance. Again, the maintenance bond would start at the substantial completion period, right, and go for a year. It kind of backs up the industry 1-year warranty that most contractors, subcontractors will rely on in any questions about any kind of performance or installation of a scope of work. So you really have those three, and those are what they do.
Justin, are there surety bonds that are specific to civil construction?
Not necessarily. You're going to get the same bonds for a general contractor that's bidding to a school, a school district, as you would a civil contractor bidding to like the city of Houston.
Okay.
So let me just sort of give you an example. Let's say the city of Houston has advertised a bid and they want to repave Westheimer Road. They advertise the bid. You'll have interested bidders pull the plans off of CivCast, put their numbers together. They will bid the project with a bid bond. And if they're the successful bidder, that's when they come back to us to request a performance and payment bond. We then write that performance and payment bond in favor of the city of Houston on behalf of our client. And that bond is backed by typically a Travelers or a Hartford, a surety company. These large insurance companies have surety divisions that make up about 10% of their revenue a year. So once that bond is backed by the surety company on behalf of our client in favor of the city of Houston, project starts. If the job goes perfect, you never have a performance claim. You never hear about it. If the money flows from the city of Houston to our contractor pays his subs and suppliers, you never hear from the payment bond. The only time the performance and payment bonds become a big deal is when there is a problem on a project. That's basically it in a nutshell. 90% of the work we do are for public owners. Your cities, your states, your municipalities, federal government. About 10% is for private owners and banks that just want that added layer of protection where they will get a bond just to protect that project and make sure that it gets finished on time and on budget.
So if you could you tell us your contact info again?
Sure, absolutely. Brian at msuretyservices.com. I'm always available on my cell phone, 281-546-8666.
I know through my years as a business advisor, business consultant, I can size things up pretty quickly as to whether or not the person in front of me is going to be successful as a client. Do you feel kind of the same way about people that come to see you? Can you kind of get a feel for them, or do you need to see their financial statements or a combination thereof?
It's probably a combination, but it's a very interesting question. I mean, you do have to be a judge of character initially, right? I mean, you have to believe what that person is telling you, believe their capabilities. Sure, can somebody say one thing and then the financials don't back it up? Sure. But in our bonded world, that's our job a lot of times, is to get their financial statements moving in a better direction and accurate. So that's kind of a typical scenario that we work with. So it doesn't necessarily have to be a character flaw, right? But you do. It's a gut check. You have to kind of read somebody and believe what they're saying. So it goes hand in hand.
And let me piggyback off that. With our clients, our startups and our smaller clients, it takes a little bit more walking them through the process, making them get the buy-in, because they could be the best contractor. They can go out and build anything, but if they don't have that back office, which is the financial statements, making sure you have a good attorney, making sure you have the banking relationships, if you don't have that, you're never going to be successful. You're just going to be flying by the seat of your pants for the rest of your career. So it takes us 2 to 3 months to figure out if that client's going to do what they need to be doing, or if they're just going to sort of waffle around and meander around and just do what they have to do just to get that paycheck.
So is it helpful when they're candid with you?
Definitely.
Yes. Rather than trying to paint
that's all we ask for.
Yes, candor.
Yeah.
Yeah. It's always the best policy, isn't it?
Absolutely.
Yeah, especially with surety bonds and financial matters, rather than trying to be slick, huh?
Definitely. I mean, whenever you're looking at surety bonds, it's different than insurance. If they're buying an insurance policy to cover something and there's a loss on that insurance policy, your premiums go up and you're going down the road. The policy covers it. In bonds, you're personally guaranteeing that bond. So when you come to us to get a surety bond, it's sort of like you're going to a bank to get a loan. So it's a little more difficult to get the bonds. Not everybody qualifies for them, but it's those clients that can do what they need to do to get the back of the office in order. Those are the ones that end up being successful.
So I know through my experience with the minority business development agency that I had clients who started out rather modestly and then grew into rather large companies. Do you find that satisfying when you see that, when you experience that yourself?
Very.
Yeah, absolutely. I mean, that's what we're here to do. We're here to help them understand the process, put the processes in place to help them. And when you see the progress and the upgrade of their bonding and ability to get into larger jobs where they've had put their goals set at, yeah, absolutely. It's what we're here for.
So when they come to you and say they don't have a good attorney, they don't have a good CPA, do you refer resources to them?
Correct. I can give you a really good example. I had a client that I met with 12, 13, 14 years ago, and he didn't have any financial statements. We basically wrote his financial statement on a yellow pad. Since then, I got him an attorney, got him a banker, got him a good CPA. They were doing around $1 million in revenue at that time. They do anywhere between 25 and 30 million a year now.
See.
And
Yes.
Their balance sheet is one of the strongest balance sheets I've seen. And it's all about, providing them the necessary resources. And then once they implement it, and then they're actually, and they still do obviously the construction side of it and make money. Obviously the sky's the limit. And that's very, very rewarding.
I would imagine, yes. So are you active in associations around town, associated general contractors, associated builders and contractors, those sort of things?
Absolutely. We participate in the Houston Contractors Association, National Association of Minority Contractors, the Surety Association.
Association of General Contractors.
Yeah.
Greater Houston Builders Association.
Quite a few. And those are where we try to present ourselves as a resource as well. What can we do? Kind of the same attitude. What can we do and where can we participate to help somebody that's needing something in the bonded world? So those are good resources for us to kind of find folks that we can help out.
That's something we have in common with B2G Victory. We kind of have the same
That's right.
mission, to help the small businesses and help them grow and turn into larger businesses.
Right.
Well, thank you for joining us for Victory Cast with M Surety Services. We're so pleased to have our guests, Brian Herrera and Justin McQuain, with us. Again, this is Mark Praigg wishing you well. Thank you.